the Eurozone's economic recovery, have suffered a sharp decline in their factory output. The data is so bad that even the most pessimistic economists have failed to predict this. The survey suggests that business activity in economic heavyweights France, Germany, is beginning to flag, with job losses mounting across the bloc at the fastest pace since March 2010. Now, this means that the Eurozone will slip into a recession, and there seems to be no way out, at least for now. For an analysis on the situation in the Eurozone, we have two very special guests joining us exclusively on ET Now this evening. James Ashley, who's a senior economist at RBC Capital Markets, and Tony Stringer, who is managing director at Fitch Ratings. Both of them join us on the show from London. Now, James, I'm going to begin with you. The Eurozone economy took an unexpected turn for the worse in March, hit by a sharp fall in French and German factory activity. How worrying would you say this is, especially given the fact that this data comes out of Europe's two biggest economies?
It's clearly quite a concern. I don't think we need to overdo this, though. I think to some extent it's a reality check in that there's been a much more positive tone, much more positive sentiment both amongst financial markets and policymakers in recent weeks, and that's in the wake of obviously the Greek bailout and the ECB's LTROs. I think what today's data do, the PMIs in particular, which you cite, they're a reminder that actually, although financial catastrophe might have been averted, there's still a lot of macroeconomic headwinds to be battled through, and I think we will see the euro area fall back into recession in the first quarter. So yes, it's a concern, and yes, it is a signal that actually the crisis is not by any means resolved at this stage.
Also, James, do you think that this is just a temporary blip, or would you say that this is this threat of a contagion is still very much alive?
I don't think it's a blip in the sense that I think if anybody had been expecting the PMIs to continue recovering and creeping extremely higher, then that was probably unrealistic. So in that sense, no, it's not a blip. Conversely, I wouldn't expect the PMIs to continue falling. I think they're probably at about levels which are consistent with most people's GDP forecasts. So a contraction, in our view, of minus 0.2% in the euro area economy is likely for Q1. The PMIs are consistent with that. So I think from here on, we'll probably see some signs of stabilisation and some signs of modest improvement. So what we've seen today isn't a blip, but neither is it the start of a new trend downwards, I don't think.
All right, Tony Stringer, I'm going to bring it to you now. How about France and the UK? Because both these economies are at risk of losing their AAA status. Do you think Paris and London will be able to put their economies back on track?
We're expecting both countries' debt to GDP ratios to peak somewhere in the low 90s around about 2014-15. And you know, that really is at the sort of limit of what you know, what is reasonable for a AAA rating. So you know, we've said publicly that we would want to see clear trend towards a downward trajectory of debt to GDP before we will be able to stabilise those rating outlooks. And I think you know the issues are in some respects similar in terms of the debt burdens. But there are some differences. The UK has a higher deficit, but France, of course, has the you know, greater direct level of exposure to the eurozone crisis and the potential contingent liabilities that brings. So they tend to balance each other out. But you know, we're not anticipating that we will resolve those outlooks until 2013 in the case of France and 2014 at least in the case of the UK.
And Tony, do you believe we will see further ratings action against the other peripheral economies in the Eurozone, especially Spain, because they seem to be running behind their targets? There's also the concern about Portugal, where the core deficit of the country has soared.
On Spain specifically, we recently downgraded them by 2 notches to single A, but retained a negative outlook. That really reflected some of the fiscal slippage that we've seen recently. The deficit coming in much higher last year than anticipated, and you know, estimates that will again be the case this year. But it also reflected the sort of continuing weak macroeconomic outlook for Spain, and the fact that they are you know, one of the countries that's most vulnerable to an intensification of the crisis. On Portugal, I mean, the rating there is BB+ negative, and that really reflects their status as, I guess, the second weakest of the eurozone member countries after Greece. They're obviously in an official financing programme, as Greece has been, and they're struggling with a very deep, severe recession.
Now, James, I'm bringing it back to you. Citigroup has said that the worst is yet to come. Now, that's a rather loaded statement. It's rather scary too. Given the data released today also shows a slowdown in the Chinese economy, has the crisis, to your mind, moved beyond Europe?
I think to some extent the crisis has always been bigger than Europe. It's certainly been centred in Europe. There's no question about that in the past couple of years at least. But it's really a question of rebalancing the global economy, rebalancing regional economies. It's a question of deleveraging. And those problems really go beyond Europe. It also involves the UK, it involves the US, and it involves Asia as well, obviously including China. So I think the crisis has always been bigger than Europe. The crisis remains centred in Europe, but certainly I think it's a recognition that China is certainly going to be part of the rebalancing process, and that's very much evident in today's data.
And again, James, do you see central banks acting together to ease these concerns? Will we see drastic rate cuts coming in from China, maybe the ECB even?
No, I don't think so. I think we're beyond the position now where there's much room for manoeuvre in terms of coordinated central bank action. Economies, both developed and emerging, in very different positions right now. So I think any action that is taken is likely to be uncoordinated and going to be primarily dependent upon domestic conditions. So I think for the ECB, for example, we're unlikely to see any further action, either in terms of liquidity or monetary policies for the remainder of this year. For China, I think we possibly could see some action, not necessarily in terms of monetary policy, but probably in terms of reserve requirements being eased over the course of this year. So action is possible, but only in certain regions and probably not on a coordinated basis.
Now, Tony Stringer, coming back to you, do you believe the European Union will put together a bigger rescue fund as demanded by the G20? And would you see this then as a positive?
Yeah, we've said consistently in our commentary that we regard the creation of a really credible financial firewall as a key policy tool for the resolution of the crisis, to protect solvent but illiquid sovereigns during times of market volatility. We continue to subscribe to that view, and I think just at the moment there is a danger of complacency setting in among policymakers following the Greek debt exchange and the much calmer market environment. There's a risk, I guess, that they could take their foot off the pedal in continuing to manage the crisis, and we think that would be a mistake.
James Ashley, would you say that the ECB's 2 rounds of cash injection have failed? Clearly, the data out today hints at a liquidity crunch beginning to once again emerge in Europe. And would you say that this could likely prompt another round of LTROs?
No, I wouldn't say at all that the LTROs have failed. Quite the opposite, in fact. I think what we're seeing in the real economic data is, despite the LTROs rather than because of the LTROs, that I think what the LTROs did, in conjunction with the steps taken to bail out Greece, of course, is avert financial catastrophe. But that doesn't mean in any way that the structural and cyclical problems of the European economy are solved. There's a lot of hard work still to be done. So I think the ECB's actions are positive. They've been a major milestone in terms of affecting market sentiment and in terms of affecting the dynamics of the crisis. But I think fundamentally we still need to see the hard yards being undertaken by the economies and by policymakers themselves.
Tony Stringer, now the Greece bond swap deal is done. They have got their bailout money. The country is heading towards elections. Do you see them fulfilling their commitments when a new government comes to power, or are we going to be headed for more surprises?
Well, I think it would be inappropriate to talk about the political will and intentions of a government that isn't yet in place. But I think the question does highlight the continuing importance of political risk in the context of the eurozone crisis, and not just in the case of Greece. Obviously, we've got elections coming up in France. We've got a number of coalition governments in some of the key eurozone member state countries, and really the risk of political surprise and potentially policy error remains a key risk factor in the evolution of the crisis, and something that we will continue to watch very carefully.